Okay, guys, welcome again to our YouTube channel. Uh, on this YouTube channel, we are going to upload learning videos, tutorials only. We'll be doing some top-down analysis on how we can approach market using smart money concept, right? So, our first video will be on Gbpusd. I'll try my best with the knowledge I have, do a top-down analysis from monthly to around 1 hour. Then from there, we'll see on our marketplace. At least someone can learn something from this top-down analysis. For those people who are facing difficult times on doing analysis, top-down analysis, we'll be including things like inducement, breakout structures, change of characters, demand zones, supply zones, breaker blocks. All of that, you'll meet them at this video. So first and foremost, this is your boy Dan, and welcome again. So first and foremost, let me start with this is Gbpusd on monthly time frame. So on monthly time frame, we can say that Gbpusd is on a bearish movement, right? So how can we tell that this GBP is on a bearish movement, right? So we can identify GBP by saying that we had this point as like this and this, right? And this is the high. This market went, gave us this low, and then went this high and dropped and started to dropping like this. So this is what we are expecting, right? So we can say that Gbpusd it's really on a bearish movement, right? If you can pick your tool called a parallel channel, and you can place this area to this area, you can see that GBP is just playing in this channel like this, right? If it taps at this channel around here, it drops. Touching at this channel, it pumps up. Touching at here, drops. Touching here, drops. So that's why this month GBP it has been selling, right? That's why because it has touched our trend line, right? So you for those people who trade trend lines, you can use this tool called parallel channel. It can really help you, right? So it can help you on how you can identify trend lines. You can identify a trend line, right? So for me, we are not going to use this tool. We're going to do a top-down analysis. So first and foremost, you need to identify your bias on monthly. On monthly, we have said that we are on a bearish movement. So we need to see breakout structures going downward and giving us a strong highs above those breakout structures, right? So what do we have here? On Gbpusd, we have this as the breakout structure, right? So market broke this structure and went down, right? So where is our strong high? This is the strong point of the market. This is the high that caused this low to be taken out. So this becomes as our strong high, right? So this is what we say. This is the low, right, which was broken by this high. So this high, which managed to took this low, now becomes a strong high, and this become a weak low, right? So after knowing that, after market has broken has given you a breakout structure, you start looking for inducement and areas of supply zone. if I can take my fib tool, my Fibonacci, and place around here. Market came to this shadow. Market came to this area, the 50% at around this area, around this area, and dropped. Right, so that becomes what? As our supply zone. Market never went to what? To the extreme level, right? So market reacted to the nearest supply zone, because this supply zone, as you can see here, we have what? We have imbalance, right? So if we have that imbalance, right, so that marks what? As our valid supply zone, right? So we need to look for which inducement. So this is the inducement, or rather you can call it as your liquidity. So this is the inducement, or you can call this high as inducement, right? So there is a candle here. You see this blue candle here that went above. So this is what? Inducement. So if you can see this this candle here, it cleared this area. It cleared this area here. So that marks what? As a inducement. So there were some people who were being early sellers, who were being introduced here, and finally they were done what? They were being taken out. Market went above to react from the extreme level, right? Okay. Sorry. So after market giving us, let me reduce the watermark just a little bit there. So market give us what? This high and this low. So we are just expecting what? We just expecting a market to break this low, to give us a breakout structure, but market did not manage to do what? To break that low. It only liquidated it. It only swept it. So that this becomes what? A sweep. Only a sweep, right? So by a sweep, we mark it by X, right? So that's a sweep. That's not a breakout structure. So in order for you to have a valid breakout structure, you need to see what? A body candle closure. So it must break this low and close below it, right? So that's why you can call it what? That's when you can call this low as a valid breakout structure. But for now, this is just a sweep. So it should be from a wick to a body. But for now, this is not a breakout structure. This is just a sweep, right? So market swept that low. So after sweeping this, now initially this was your low, like that. So what do you do if market has swept your low? So now you transfer this low from there to here, right? So that's what you need to do. You just need to transfer that low from there, let me mark this, from there to here. So now this becomes your low, and then this becomes your high, right? So we need to mark the extreme supply zone. If market has swept this, and this is the high, so this high becomes what? This area of this becomes your supply zone. When market stops there, you expect either to sell, or if it breaks it, you can get what? A change of character. All right. So then another thing I can add is this. Remember, this is on a monthly, right? This is a monthly time frame. We have this what? This sweep. But if you go down to daily, like 4 hours, daily time frame, 3 hours, 2 hours downward, this will not be a sweep. This will be a valid breakout structure. But on monthly, this is what? A sweep. All right. So that's what you need to know. That's why we've said this a supply zone. So having that supply zone, all this here were inducements or liquidity. We can call them liquidities. All right. So liquidity we mark with that sign. So market reacted from this supply zone and dropped, right? And it dropped, broke this low very well. Now the low has been broken with what? With a body candle closure, like that. It broke and closes what? Below that low. Right, so that becomes what? Now that becomes our valid break of structure. All right, so after having that valid break of structure, that break of structure, that implies that we are what? We are continuing to go down. So number one, what do we need to know? We need to mark what? We need to mark our strong point. So now this becomes our strong high. Where is our supply zone? And where is our area of inducements? All right, so looking at this, we have this candle here, this black candle here, which has what? This imbalance. So we can mark that candle as what? As our supply zone. All right, so after marking that as our supply zone, like that, so that becomes as our supply zone, right? So this becomes our supply zone, right? So where is our inducement? So this is the inducement. There were some people, there were some sellers, early sellers were being introduced at this area, right? So now that becomes as our inducement. All right, so we are expecting market to react from this supply zone, and we target this low. So this low will be our expected break of structure on monthly, right? So this low, we are just expecting it to do what? To be broken, right? So if we expect it to be broken, we are expecting market to react from here, from this supply zone, and broke that low. But this remember, this is on a monthly, so it will take time for this market to do what? To reach this level, right? Right, so we have seen market reacting from a supply zone downward. So what are we going to look in this scenario? We are just considering a sell, right? So let's narrow down to the next time frame, and we see how and we can analyze this move. All right, we need to analyze this move so that we can understand how this market reacted from that supply zone. All right, so now let's move to weekly. So on weekly, we are not going to concentrate much from the previous price action. We are just going to analyze this move, right? So let me position my camera in such a way you can see this area very well. All right, let's continue. We can see that market is reacting from this supply zone. So remember, this is the inducement from monthly. All right, so let's start from here, from around this push, then we go this. So we had what? We had this breakout structure here, right? So we had that breakout structure, and again we had this breakout structure here on weekly time frame, right? So after having that breakout structure, we had this as our change of character to the upside. So market, it broke that, went above, breaking this internal breakout structure and giving us what? A change of character over here. So it broke this strong high around here, giving us a change of character to the upside. So this was a pullback for this supply zone, right? Okay, so this supply zone, this change of character, market pulled back to react from an area of demand zone and went above. So after it went above and broke, this high, giving us a breakout structure. Remember, this is internal. This is an internal structure we are looking at. So this is our breakout structure, right? So this breakout structure, we had what? We had this shadow. You see this candle here which has swept the previous candle around here? I mean, let me point it very well. This candle, this green one, it has swept these previous candles, right? So we're gonna mark that candle as what? As our demand zone, right? So like this, right? So now that becomes what? As our demand zone, like that. So we expect market to pull back to react from this demand zone and pushes up. So if we have that breakout structure, where is our inducement, or rather liquidity? So this now becomes as what? As our liquidity or inducement. So there were some people were being introduced here, so we can call that liquidity or inducement. All right. So market reacting from this demand zone. Where are we targeting? We are just targeting, let's say, we can take a buy from this area, right? Like this and like this, stop loss here, then we'll just target here. All right, remember we have what? A breakout structure, this area, right? So after having that breakout structure here, so now we expect to have what? A breakout structure here. But remember, on monthly, this is an area of inducement, right? So there are some people selling this move, so their stop losses are around here, right? And you've done this internal market structure analysis. You've now known that I'm expecting to have what? To break this high to get what? A breakout structure, all right, before market tapping to my zone. All right, so there are some people who are introduced here, the sellers, early sellers, right? So you just expect to have what? A breakout structure over there. So now that becomes as your breakout structure on the weekly, right? But keeping in mind that we have what? This is an area of inducement on monthly, right? So after having that breakout structure, where is our demand zone and where is our liquidity or inducement? So having that breakout structure, we have, as you can see, we have what? We have this demand zone over here, unmitigated zone. So on this unmitigated zone, we have what? We have an area of FVG, of an imbalance, and we have some sort of liquidity over here. So this qualifies this area to be a valid demand zone, right? And as you can see, our market is reacting from that demand zone, right? So now this becomes as what? As our demand zone, right? And we have said that we have what? We have an imbalance here, right? So after having that imbalance, right, having that imbalance, then we have some sort of trend line liquidity. So we expect the market to sweep all this liquidity, tapping to this area and pushes up, right? So let's narrow down to daily. But before we go daily, right, we have another breakout structure over here. Market broke this structure here before tapping to our supply zone. So we have a breakout structure here, and we have a change of character, and we have a change of character over here. So after having this change of character, that implies that what market has really shifted to bearish. All right, so we are just having that change of character, and we have this candle here as what, as our supply zone, right? So what do you need after market tapping to your zone? Let's say, for example, we have a monthly supply zone like that, right? So market tapping to that supply zone, what or rather, let's say this market giving you this breakout structure before tapping to your zone like that. It broke this here. Then after tapping to your zone, what do you need to see? You need to see that low that caused that breakout structure being taken out like that. Market tap to an area of supply zone again, and we go down. So this is what you can see. This is what we are expecting to see. All right, so that's a breakout structure before market tapping to this tapping to that supply zone, and this is a strong point which was being broken, giving us what, change of character, right? That change of character, it implies that the direction has what, has changed. All right, so having that change of character, and now you need to look for an area of interest like that. Market tap to that area of interest and drop. All right, so after tapping to that area of interest, you need to see this low being taken out to give you what, another breakout structure. All right, so you need to see that area being broken to give you another breakout structure. All right, so we've all known that what we are supposed to be looking at this area. So what are we expecting? So if this demand zone is going to hold this market and it breaks this high like this here, we expect something like this, and we continue. All right, so if this point is going to be broken, this point over here, we're not going to get what, another break of structure. But if this point is going to be respected, this supply zone, we need to see something like this. Market taps that supply zone, and thus giving us something like this and this, and then we drop. All right, so this is what you can expect, because we've said we are just reacting from a supply zone. So we are expecting this supply zone here because we have a change of character. So now we expect this supply zone to hold this push, then we go short. All right, okay. All right, so now let's go to the next time frame, and that's our daily. So on daily, this is what we can say. So on daily, we can refine this area to around that candle, right? And we have seen that we have this, all right, this change of character. So all these are liquidity. We're just expecting market to sweep all these areas. This is a sort of trend line, right? So we are expecting market to sweep all these trend lines, all right? So, and we have seen that the market is reacting from this demand zone. So let's go down to this demand zone and see what's really going on here. All right, so after in that demand zone, let me remove this aside. So we have what, we have this as a breakout structure before market decides to push higher, and we have this area being broken, giving us what, a change of character. So after having that change of character, where is our demand zone? So this candle here becomes what, our demand zone. All right, so that candle becomes as our demand zone. So initially this push, this sell market, and I mean this buy, market reacted from this imbalance. So where is that imbalance? So this imbalance, it's around this here. So market reacted from that imbalance, that FVG. All right, so now that becomes as what? As our FVG. All right, so market reacted there, then initial market went to sweep this area and dropped. All right, we just need market to react from a demand zone. So it came back taking these early buyers like that. So we are just expecting market to pull out of this zone. So what we are now expecting to get another change of character inside this demand zone to push higher, to go long. Right, so now let's go to, that's a daily. Right, so we have seen that the market has tapped to what? To our demand zone. So now let's go to 4 hours. Right, so on 4 hours we've seen that market, this area, market reacted from an area of FVG and pushed higher. Right, okay, so on 4 hours we can refine this demand zone. Okay, or rather we can just leave it there, because we need to see a change of character inside this demand zone, or happening market has because market has just tapped to our demand zone, so we need to see a change of character around here. That's change of character to go long. Right, so now on 4 hours we don't have much on the structure. We cannot see the structure clearly. So now we go to, let's go to 2 hours. On 2 hours nothing. Let's go to 1 hour. On 1 hour, yes, exactly, on 1 hour, straight to the point. Let's go to the point straight. On 1 hour, we can see that all right. So on 1 hour market swept. We have equal highs at around here. So equal highs, that implies that what? Liquidity. So market swept that equal highs lying above there and reacted from this shadow or this candle over here. All right, very nice. So that now becomes what? As your supply zone. So market swept that liquidity was just lying above there and dropped, giving you what? Giving you this breakout structure. Right, so market giving you that breakout structure and tapped to our zone. All right, remember, we're just looking for a change of character from this zone. Right, so we have a breakout structure and we have this point, this high, as what? As our strong high. So we have that as what? As our strong high. Right, and we have this candle here as our supply zone. Right, so that candle has what? Imbalance, and we're going to take this candle, the high of this candle here, as what? It's an area of inducement, so we expect it to be taken out. But remember, we are just reacting from an area of demand zone. So in order for us to conclude that we have shifted to bullish, because market is reacting from this demand zone, so what do we need to see? We need to see market taking this inducement, tap to this area, giving us a small reaction, then finally market takes this strong high, giving us a change of character. Then we need to see something like this, then we go along. So this will be our change of character, and this will act as what? As inducement. We wait for it to be taken out. Market tap to where? To a demand zone. Right, to a demand zone. To a demand zone, then we target above. So we'll be target to break any high which will be created at around this area to give us what? brick of structure, right? So keep it simple like this. Stop complicating yourself with many strategies. Just keep it simple like this, and you'll have a positive result. Thank you guys, and let's hope we can catch up with more videos will be uploaded to our channel. Thank you.